finance and wealth.
Keep track of your spending. And part of the spending, of course, as we said, be able to separate wants from needs. That's secondly.
Leadership and governance.
There are people who take on the political aspect and try to water down important, significant decisions we leaders take for the good of this country.
Not forgetting parenting.
Now you're raising kids or children who are in a totally different time. You get it. Those days your mother would just give you an eye and you know this is a problem.
They are visitors.
And it's just there are visitors
and
around.
Mom gives you this eye, you know?
Yes.
Catch more of this every Monday to Friday at 9 p.m.
And it's just there are visitors
and
around.
Mom gives you this eye, you know?
Yes.
Catch more of this every Monday to Friday at 9 p.m.
A lot is going on in the world, but today is Ash Wednesday, the day that ushers us into the 40 days prayer and fasting period. Now, all Christians, I believe, we embrace this season, and of course, it is climaxed on Easter. Now, when Ash Wednesday pops in, we know Easter is almost here, but also the town has been so busy and fully painted red. Now that is when people like Brinko remember that it is Valentine's Day. Now, happy Valentine's to all of you, but happy Ash Wednesday and happy Lent period. Here we are on Family Hour with me, Edrine, Osteen, Mukalazi. This is a Wednesday, and we are here with our Wednesday edition. We are talking about finances, and today we are talking about tax compliance. Of course, last week we introduced taxes and a number of things to talk about taxes, and today we are talking about tax compliance. Of course, somehow we mentioned something to do with tax compliance, but now today we want to have an elaborated discussion on tax compliance. With us is none other than Dedan, Mutatinensi. Like I said, I want to be so careful when I'm articulating this name. Yeah, but he's a tax expert. He's also the CEO of Demo Consults. This is a tax advisory firm. He is going to take us through this discussion. It's a pleasure having you once again.
Thank you, Mr. Mukalazi.
Yeah, I know. I know you would have been somewhere celebrating today, but we are grateful that you're here to share with us, at least before you can go. The day is still young.
Thank you, Mr. Mukalazi.
Yes, I kindly greet our viewers, then we get into our
good evening, everyone. Happy Valentine's Day out there. Enjoy responsibly.
That is very important. Enjoy responsibly. But you can as well follow us on our social media platforms. You can join the live engagement on YouTube, on Facebook, but you can as well send in your question or comment on all our other social media platforms like Instagram, Twitter, Facebook, and still YouTube, as you be part of this discussion. We are here to talk about tax compliance. Last week, this word kept on coming, tax compliance, but we didn't want to unveil it until today. Sure. And so, now tell us what the broader meaning of tax compliance.
Okay. Thank you so much, Mr. Mukalazi. I'm happy to be here once again, and handling a topic that is so close to my heart.
Okay.
Because we cannot talk about tax and we forget compliance. Sure. So, going through such a topic is just an interesting thing. But to go straight to the topic, compliance, we are looking at doing the right things at the right time.
Okay.
In simple terms. But we are saying that, are you in line with what the tax law says? Can you fulfill your obligations as and when they arise? Can you do what you are required to do as a citizen in terms of taxation? So, tax compliance, we are looking at all the tax heads that we discussed last time. And as I mentioned last time, we said that tax registration is the first step into compliance. Because as citizens, we are required to register for taxes. So, the moment you haven't registered for some of these taxes, when you are actually required to register, then you are not tax compliant. You are not fulfilling your obligation. I can give an example.
Yes.
That if today you are an employer, whether a company or an individual, and you have people you pay, it is your obligation that as you pay, you must deduct what we call pay as you earn. The taxes on your employees. That before you pay them, deduct certain percentages that belong to the government and pay to the government. Then your employee gets what is remaining as the law guides us. So if you have staff and you are paying them when you haven't deducted this, then it is a matter of time that the moment URA comes to you, they will actually charge you these taxes and you will be penalized for non-compliance. That is just as an example. Now, when you look at, we said the moment you register for taxes, the first tax that comes onto your profile is income tax.
Yes.
Now, what I want us to appreciate, me and you and all our viewers out there, is that the moment you get registered, the first obligation that comes with registration is that you must communicate to the government through URA the position of your tax affairs. That getting a TIN, you are getting onto this register, taxpayers register.
Yes.
So you are required to always communicate and update the government through URA. You know, quite often we are saying URA, but URA is just a body that collects taxes, but it does this on behalf of the government. So we are saying that the moment you get a TIN, just know that you have just started your journey into compliance. You have to file your returns on time. As we said, when you are filing returns, it does not necessarily mean that pay. That is also something that I need to put clear.
Yes.
When we get TIN numbers or tax identification numbers, we have been enrolled on the taxpayers register. Then, the moment we get there, we have several obligations, and one of these is file your returns on time. The law is clear. If you are an individual, if you are a company, when are you meant to file your return? Now, the moment you have filed your return, in case there is a resultant tax, or in case you have a tax liability to pay, then, again, the law is clear. And today, the law says the deadline for filing is the same deadline for payment. So, if we are talking about compliance in terms of income tax, we are saying, for example, for companies, companies which follow a normal financial year, a government financial year, that is from July to June, they are given 6 months, that is now up to December 31st. That's the period. Within the 6 months, they should have prepared all their financial statements so that they are able to file returns by 31st December every year. Now, if that's the deadline for filing, it means even...
So as you're filing returns of the previously completed financial year?
Exactly.
Okay.
Exactly. That's why I'm saying that if you are following a normal financial year, the law gives you more 6 months after the end of the financial year upon which you are meant to file your returns. And the same law says on the deadline of filing, the day when you are meant to submit your return, then you are again meant to pay a tax in case it's there. Now, in case there is no tax, you communicate to the government through URA, through what we call a return. That this is my position. My period is done, but I have not yet made the profits. Then you will have done your part. Now, you have had many people being engaged and some others receiving what we call tax assessments. Now, since the law is telling you that on 31st, you are meant to file and pay, in case you have not filed income tax, then there are repercussions, there are implications. The tax body won't just sit and let you, move freely. No. It is clear that the moment you have not filed, then they will sit and estimate. At that point, they are estimating because they are not sure. But even when they are estimating, they normally have a basis. For example, they can consider the industry. Say, in this industry, most people are operating like this. So if they are operating like this, let's assess this person 100 million. In assessing 100 million, they are doing it because you failed on your part. You failed on what we are saying. You failed to comply with the tax regulations or tax laws. Now, many people are struggling with these assessments.
Sure.
And they haven't appreciated that why they are actually being penalized is failure to comply. So that's why it is important that as we discuss tax compliance, every other taxpayer, big or small, we must listen to some of these topics and actually appreciate.
Yes.
If you are an individual, I said last time that when you are formally employed, you don't need to file a return. Yeah, the law is clear. This is an obligation of your employer to actually deduct, file, and pay. So as long as you are formally employed, you have only one source of income, then you are good to go. You don't need a return. But then there are some other scenarios. Mr. Mukalazi is here, but you have other businesses outside. Then you will be required to file your personal return. And in this personal return, when you are looking at an individual, you are looking at the gross incomes. In total, how much have you earned? Yes. You may be earning $1 million here, you are earning 200 somewhere and somewhere. So in total, you are earning possibly 5 million. So if you are earning 5 million, you won't say that because my employer has filed, that is the end. No. As we stated, that as you transact in your businesses, in one way or the other, the authority will actually get this information. So as you are comfortable saying that you have actually complied, they wait for you, you are not coming through. You get an assessment. And normally these assessments, they come when they are actually high. Because in one way or the other, they are punitive. You have failed on your role. So if you have failed on your role, they won't just massage you.
In others, they're punishing you.
Yes. That's what I'm saying.
For your failure to comply.
That if I can use an example, if your total earnings are 1 million, the tax on that is 202,000 as an individual. But if URA is to assess quite often, they can even assess you 5 million when you have actually earned 1 million. Why they are doing this is you have failed on your role, on your obligation of compliance. So they are actually pushing you. The moment you see 5 million, you're like, 5 million, so now you must bring yourself and actually interface with them or engage them. Then, of course, there are measures, there are mitigations, there are interventions that if I have, for example, received that assessment, is that the end? The answer is that no. We have a process that we call objections. And objections, which is also part of compliance, that even when I have failed on my role, but now the tax board has estimated this huge tax, then the law again allows me that within 45 days after receiving the assessment, those days are so key, because the moment you go beyond, then there is again another process different from this, that within 45 days you can now lodge what we call an objection. An objection, you are saying, yes, I received your assessment, but I don't agree with your assessment. But if I don't agree with your assessment, this is my position.
Okay.
What am I saying? That when you are lodging in an objection, it goes with what we call a return, the other form of communication,
Yes.
to URA. And you are telling them that, yes, you have assessed 1 million, but me, from what I did, actually the liability should have been 500. It is now incumbent upon you to support with enough documentary evidence that indeed your tax liability would have been 500. That way, the tax board will actually allow your objection in your favor. That now you have reduced your liability from 1 million, for example, to 500, because you have supported fully. They are satisfied. That is one area. We have an area, for example, of value-added tax, as we mentioned last time.
Yes.
There is a certain category of people, or business people, or entities that are meant to register. Not all of us. Again, we mentioned the reasons why not all of us must be on the register, because there is what we call the threshold. The moment you hit 150 million in 12 months, the law is clear. Register, apply, and be on the VAT register. So if you have not applied for this and the tax board runs on you, the penalty is double the tax. Yes. This person transacted, didn't actually come for registration, so has been in one way or the other dodging to pay a tax. The penalty is just clear. On the same tax head, recently, starting with 2021,
Yes.
IFRS came into place, electronic fiscal reporting system. A system whereby today, if you are on VAT register or value added tax register, by the time you issue what we call a tax invoice, it must have come from the back end of URA. That as you are sitting on your system, issuing an invoice the way you would have issued an invoice, that now the systems are communicating. Taxpayers' systems communicating with URA. Of course, if this is a detailed thing, I'm just picking a few areas in terms of compliance. So, the first bit in terms of compliance is that as long as you are a value-added taxpayer, you are meant to use IFRS. So, that is now an issue. So, are you using IFRS? If you are not using IFRS, then you are not compliant. You are not compliant with the tax law. And out there, as we do our practice at the Demo Consult, we have seen this, that someone is on VAT register, but does not know how is now being registered linked to IFRS system. But the law is clear, and the Gazette was put out by URA, says as long as you are on value-added tax register, you are required to be on IFRS system. So any person out there who may be value-added tax registered and is not issuing all sales through IFRS system, then that person is not compliant or is acting contrary to the provisions of the law. And again, the moment this person is caught, the repercussion is clear. For example, today, if you are on IFRS and you happen to sell something outside the system, and URA gets this receipt, the penalty is 6 million on a transaction.
Hey, that is quite
It is
a lot
that
of
serious that the moment the law says this and you are failing to do what the law says, then you should be ready to face it when your time comes. Yes. The other bit is, again, on value-added tax.
Yes.
When you look at what the law says in terms of filing and payment. The day you file, which should be every 15th of every month, that's the deadline for filing value-added tax returns, monthly returns. The same day, you are meant to pay the resultant tax, or the tax that comes in. If you have not paid, the government charges 2% on the outstanding every month on a compounding basis. I need to explain that.
Yes, please
for the
explain
interest
it.
of
Yes.
Now, a compounding basis is that if they have charged 2% on what is outstanding, in the next month you have not paid, even that interest will accrue some interest, will yield some interest. That's the compounding basis I'm talking about.
So I have a penalty of 2%.
An interest.
An interest, sorry, of
Yes.
2%.
Yes.
If I don't pay, even the next month, I have this awaiting 2%.
Yes.
And then another interest still.
You have two kind of things. That one, the 2% is every month.
Yes.
But even the interest that is coming from the 2% applied on the outstanding will also accrue interest. That's the compounding interest computation compared to simple interest. Because simple interest would have been 2% every month. But here we are saying it is 2% every month compounded. That even interest will also yield
Another interest.
So, in a way of compliance, we are saying if you are a business, why should you go into extra costs?
Exactly.
Can't you avoid this by paying on time? Of course, paying on time, you are saving yourself from unnecessary costs, but also the government is happy with you. They are getting the money on time so that they can also plan using this money.
Okay.
Now, the other thing that I would want our viewers to appreciate, when you look at, for example, income tax,
Yes.
if you are meant to file a return by 31st December and you fail on your obligation, the impact is that the moment you get into January and you file your return, that return, there is a penalty of late filing.
Again.
Yes.
Let's take a short commercial break. When we return, we are continuing from now that other return, especially if you fail to file a return.
Family TV, enriching lives. Family TV, enriching lives.
Wow, we are talking about tax compliance, and sometimes when we talk about these things, when you talk the term compliance, probably you could be in the informal sector. You have your informal business, you see it far away from you. You never even think of any time you are a will now will come in to now penalize you for some of these things. But thank God we have a tax expert today in this particular show. Now that means if you are just tuning in, or if you're watching alone and there is someone you'd really want to enjoy to follow up with this discussion, feel free to share with them the YouTube link so that they can join in, but also call someone to tell them to watch, because there is something important that is being talked about here. Soon or later, anyone can be in the trap if you do not do the right thing. Before the break, you had actually talked about, we were looking at someone in the informal, someone with their income tax. They're supposed to file their returns by December 31st, and then they file the returns in January. What happens to that person?
Okay, maybe something to clarify on. When we are talking about 31st December, it is just an example. Okay. Different people have different accounting periods, and the law will apply the same way. If, for example, I do January to December, then it means my deadline for filing these returns will be on 30th June. Again, those are 6 months thereafter. So the point we are trying to put across is that if you are meant to file your returns on the due date depending on your accounting period, and you fail on that obligation, just a day after the deadline, if you file your return, the penalty there for late filing is 200,000. That is on income tax. But also to appreciate that the 200,000 is per every month that you are late. Speak it clearly, that if I file this return now 10 months later, the penalty will be 2 million. If it happens that you take maybe 30 months, then you just multiply by 200 every month that you are late. And these are some of the things that can be avoided. You cross your financial year or your accounting period, you have all the 6 months to actually prepare yourself so that you are able to file. But again, you fail within the 6 months. Then what do you expect from URA? I've seen some of our people there. July comes, you're like, excuse me, we are in the period of filing returns. Can you prepare what is necessary? And then the returns are filed. Hey, we shall handle. September comes, November comes, you are in December. In one way or the other, it is possible that because you are getting into Christmas and all these festivities, you end up not filing. So by not filing alone, 200 as the penalty. But also, when we talk about compliance, let us not limit compliance to filing and paying. Yes. There is an issue of accuracy. How exact are your returns? Because tax being a cost as it is, everyone would want to dodge a tax. So the authority won't allow you to file whatever you want, and they are comfortable with what you have filed.
How are they going to know that what I'm filing is not the real figures?
Thank you. Now, in trying to ensure compliance, maybe before that, we operate as a country. We have a system called self-assessment. That's the tax system that we use, that they allow you to file, to communicate. First communicate your position yourself. But then the authority does what we call return verification and examination. That even when you have submitted, that's not the end. It does not necessarily mean that because you have filed, you have fulfilled all your roles in terms of compliance. It's not enough. So what are we saying? That when we are filing, let's try as much as possible to do the right things. Because at a point when URA is doing return verification and examination, because these returns are approved, until your return is approved, anything can happen. They will check the accuracy of what you have submitted to them. Sometimes when they are checking this, the accuracy, they compare with the other data that they have mined, as we talked about it last time. But also, at a later point, URA does what we call audits. And there are several types of tax audits. These days, what is common is desk audits. Officers go through your returns, and wherever they see a risk, they invite you. We are seeing this mismatch. Can you support? That is what is common. But also, field audits are being done. That as a company, they come here at Family TV, they spend time here looking at all of these documents. You file this, support it, where are your bank statements, and to say that the moment there is an engagement between a taxpayer and URA that involves a tax matter, the first document they ask for is a bank statement. Let me caution our people out there.
Yes.
That we have had scenarios where someone calls you, hey, I have my 20 million coming, can I use your bank account? If you have been doing it, let's stop it at that. Because the moment now there is a tax issue you have between you and URA, and you are invited, the first document they ask for is a bank statement. If they find your account actually some 20 million passed through it, then the question is, what was the source of this income? It could be an issue of money laundering, you know, and these days the government is getting serious on issues of money laundering.
Yes.
I mean, every coin that goes through your account, you should be able to account for it, to explain the source and possibly the destination. So let's avoid those shortcuts. Some people do these things because they know them. Someone will say, my 50,000 is coming from South Africa. At least that one is common. I always hear about it. So if you allow the 50,000 USD to go through your account, just know at a point when URA is engaging you, most likely you will carry the liability that this person would have carried. So that should be put clear. Now, as we talk about compliance,
yes,
as I said, it goes beyond filing returns. File your returns on time. If you are meant...
Actually, I think before you even leave the returns, someone sent in something that is in line. It says, what happens if I am supposed to file returns, but I didn't make any profit?
Thank you. That question is common. And as I had stated at the start, filing a return does not mean paying a tax. Let this be clear. It is communicating your results or the results from your operations to the government through its tax body, which is Uganda Revenue Authority. What am I saying? That if I have transacted in a year, I have actually realized some income, I have received some income, I have made some sales of, let's say, 100 million. That does not necessarily mean that I will pay a tax because I have made sales of 100 million. Why? I may make sales of 100 million, but my expenses are 150. That gives you a loss.
Yes.
And the government does not tax a loss. Because if you are saying taxes are cost, you are already in a loss. Why should now the government come and, it's as if you are drowning and someone comes and steps on your head. So to answer this person straight,
yes,
when you have made a loss, or if you have not made any income, your obligation is to communicate or to file a return, show the affairs of your business, that me, yes, I have a company, or I'm an individual, I have a team, but I have not made any income. As long as URA does not have more data, then you are good to go. But quite often, we want to use that to actually mislead the tax body on our financial affairs.
You go with a claim of losses.
Yes. And now that's how the other issue of return verification, their tax audits, they want to know. Mr. Mukalazi is claiming a loss of 100 million.
Yes.
How true is this? The other important question that I always get as we do the practice, people ask, but can't we do more expenses so that there is no tax to pay? That is very wrong. That's not the principle of taxation. I discourage it. Quite often I tell people, no, that one is wrong, because the principle is simple. If you have made a profit of 10 million, URA wants 30% as a company. Your take is 7 million. And maybe we need to appreciate more. Why is the government taking the 3 million? There are services, I always give an example, that whenever we are on these roads, we never pay even a single coin because we have used these roads. Yes. Just look at the junction. Whenever there are no traffic officers, everyone pretends to be wise. Yes. And at the end, there is total confusion. Yes. But the moment a traffic person, a traffic man comes, says, stop, go, go. And you see now the traffic is flowing very well. Those are some of the services that we actually don't pay for directly. The only way we can contribute to these services, and many others, it is through paying a tax. So why should we actually fight to cheat? Instead, we should prepare our affairs so that we are paying fair taxes. Because later on we shall handle what we call tax planning. What we see, if you are operating a business, whether an individual or as a company, how do you go through this compliance journey? You plan for your affairs very well, so that at the end of it all, you pay a tax to the government, but also the business survives. But quite often, we want to hide, and hiding is now non-compliance. Non-compliance is so costly, especially in today. Yes, previously, people would do, if you remember very well, depending, of course, on when you came into existence, there is a point when goods would enter into a country and paying taxes, in terms of custom taxes, would be just out of negotiations. Yes, how much are you willing to pay? I will pay this. That is no more. As I said, URI has applied
it seems to be a good error.
But it's no more. It's no more. So, URI has advanced in the use of technology. So, gaps for non-compliance and dodging taxes, gaps are totally limited. I can say everyone must pay a tax because there are measures, there are systems to actually look for you. That's what I can say. So, as we talk about compliance, today there are huge costs attached to non-compliance. Every other individual in business should try to actually do the right thing at the right time. There is an issue of pay as you earn on the side of employers and employees. The question that I've always met again in practice, I'm saying, Dedan, you are saying I need to pay as you earn. I have already paid my staff. They are not demanding anything. Why should I pay? How will I benefit? To them, they feel because I have paid, even if I don't declare, it is okay. After all, this is already an out-of-pocket expense. I've already paid. But as I stated, you are failing on your obligation. Because the law is clear that as long as you are an employer, before you pay your staff, please deduct. The percentages are clear. There are several percentages that are applicable in terms of pay as you earn. That deduct and remit to the government. It is a form of withholding tax. And the law again is clear. If you are required to withhold tax from the people you are paying and you fail on that role, the government has the right to now collect the taxes from you, even when you have already paid. But most importantly, when you look at the businesses that we operate, the biggest expense is salaries. Save for manufacturing and all those others. But most businesses, the biggest expense is on salaries. Now, for you to claim an expense called salaries in your income tax return, because in the income tax return, we are only looking at what did you realize as incomes, then how did you use it, what did you spend on, then what's the net difference. Now, for you to also include salaries as an expense in your income tax return, then it should have gone through pay as you earn. That's the easiest way of supporting it. That you have deducted pay as you earn from the salaries you have paid, so it is a business expense, claim it. So what I'm telling business owners is that by you paying your staff and not declaring pay as you earn, you are losing out. How are you losing out? That if you pay 12 million in a year, if you have not used the pay as you earn system, and the government disallows or does not agree with you that the 12 million is an expense, the implication on that is that they will charge that 12 million 30%. That is now 3.6 million. That yes, even when you have already paid your staff, because you didn't do your part of declaring pay as you earn, the government says we don't know this as an expense. So since we don't know it, it is part of your profit. So it is 30% on top of what you had actually paid. I want that to be clear, that you have already incurred 12 million as a salary to someone, but because you have not declared through pay as you earn system, the government does not know that as an expense. So what we call disallowing an expense. So the moment that expense has been disallowed, the implication is that 30% is charged on that figure because it is assumed that this is your profit. I hope that one is clear.
Yes.
Now, saying that how do I benefit, it means if you can't do it, it's more of a penalty. Yeah? If you have not done this, then for us, let's take our 30%. It is a profit.
Let us talk about the other implications when it comes to tax non-compliance.
Now, today, as I had stated, it is so costly for any business person not to comply. The implications are, one, we have seen today that there are business disruptions.
Yeah.
Very common. That you today can come and cross this TV station.
Yes.
And the law allows them. So imagine all your clients, the people you serve out there, they come and they find the whole station is closed. But on top of on top of you closing, you actually lose out business.
Yeah.
Because people are not comfortable dealing with someone who is not tax compliant. That is one. Two, as I had stated last week, we said that today every other serious business will require you to have a tax clearance.
Yes.
You cannot get a tax clearance when you are not tax compliant. Because the tax clearance is a document that says, we as the government through URA, this person is a good person in terms of tax matters. So if you are not compliant, then you cannot get a tax clearance. The other point is that there are huge penalties and interests that accrue to a non-compliant taxpayer. We have seen this, that where you would have paid $1 million, you may end up paying $3 million because you have not complied on time. Then there is what we call default or estimated assessments. Because you have not filed your return, then URA comes in and estimates. Your affairs shows that maybe your tax would have been 2 million. URA estimates and says, we need 50 million. So if you get this assessment, even if you try to go through the process of objection, the time you put in and possibly the costs you put in, we have also to appreciate that most of these things you cannot do them as Mr. Mukalazi. That's how tax professionals, that's how we come in. But then if you are to engage me to handle your objection, of course it cannot be for free. I'm in business, I have costs to pay, so you have also to pay me. So I'm saying some of these costs would have been avoided if we actually comply and do what we are meant to do on time. Now, there are many others that because you are not compliant, every now and then you cannot be stable. You see a message from you, these guys have come again. Instead of doing what you are meant to do and say, is my business making sense or it's not making sense? Every time you see someone passing, could that person be from URA? Because you know that actually what you are doing is not
Right.
is not right. And issues like VAT, there are businesses which cannot transact or give you a contract when you're not VAT registered. So we are saying, fulfill your obligation. If you hit a threshold, or if you are required to register for any tax, register for it. Then go and compete. I know the challenge there is that there are others, for example, we may be doing a similar business. May I register for VAT, for you don't register. In one way or the other, my products will be relatively expensive by the 18% when we are selling to the common man. But of course, what I can tell the viewers is that is short-lived. At where we are heading, even if you see a colleague is not yet on the register, it is a matter of time.
Just wait.
You cannot be wiser than the government. It's not there. I don't think it's possible.
Okay.
Yes.
Someone has just sent in another concern here and say, I look at a situation when my business has been closed by URA. How long should it take them to open it? Is it after paying, immediately after paying, or there is another process that you have to go through in order to open your business again?
Thank you for that wonderful question. What I can say is that URA as a body, depending of course on the officer you meet, who you interact with, but they listen. They listen. Even if they have closed you today and you actually visit them, listen to their concerns, you also table your concerns, you can easily reach a common ground. So they can even close it in the morning, by midday it is open. Because what I can also say is that by the time they close, it is one of the enforcement measures. Maybe I had not mentioned that. That when you are not compliant, there are several enforcement measures, and one of these is freezing your bank account. You are being paid, but your bank is saying, no, we cannot pay you because the government through URA have frozen your account. But also there is what we call agency notices. Here they are saying, pick money from this account and pay the government. Again, the law is clear and it allows them. They can also say, Mr. Mukalazi, since you deal with Dedan, we are writing to you, collect this money of the next payment. So they can now agent a third party to actually collect taxes on behalf of the government. Now imagine you have this good client. You have been at a good relationship and happy. But now the government is writing to him. This is a tax defaulter. So collect from him. Automatically that will affect your relationship.
True.
That if you're not serious, the contract may be cancelled.
Exactly.
So the issue of closing is one of the enforcement measures. But quite often, even when they come and close, they're just saying, come and we iron out our differences. Yes, I know they move with the UPDF and all that, but even then, when they have closed it, they are not that, it is an enforcement measure that you have failed to do your part of paying taxes. So we are saying, first come, we iron out our differences, then you go and open your business. So the question of time, it depends on how you act.
In other words, you don't have to run away from them.
Exactly.
Because I look at a situation where someone sees now the men in uniform with URA teams, and then they take off, run away. So this now means you don't have to run away, you have to face them.
Yeah, only that the challenge I see there is that our taxpayer education is still lacking as a country.
True.
So quite often the relationship between the tax officers and the taxpayer, the relationship is not that good. Now, along the way, that's how tax professionals come in. That even when they have come, possibly the language they are using is not a common man's language. Even when they are writing letters to you, inviting you for some of these engagements, even when you go there, quite often, you may not actually comprehend the concerns they are raising. So, where you cannot, then engaging a tax professional is actually the way to go. Because the tax professional, this is his job. The authority is using Income Tax Act or Value Added Tax Act. They are using tax laws to actually administer these taxes. As tax professionals, we are also using the same laws to actually support our clients in the compliance journey. Yes.
Okay, well, we are almost out of time. What are your parting shots when it comes to tax compliance?
Yeah, thank you. When it comes to tax compliance today, one is that it is too expensive for someone not to be compliant. That's one. Two, that compliance is a journey. It's a journey, and it is continuous because there are monthly obligations, there are periodical obligations. So if you have complied 1 month, that does not mean that you sit back and say, me, I'm compliant. It is as long as you are in business, business is a continuous activity, even compliance is a journey and it is continuous. So let's all embrace some of these things. Let's try to understand and study, appreciate our obligations. The moment we know our obligations and rights, it becomes easy to interact with the authority, Uganda Revenue Authority, and other people who are knowledgeable about tax matters, so that instead of running away from our businesses, instead we run to these people for help. Thank you.
Thank you so much. We are grateful, and I believe this has been really an insightful discussion. Thank you so much.
Thank you.
I believe someone out there has picked out, especially when you realize that people are now sending in concerns, that means that they are following. Yeah, thank you so much, you who have been following, wherever you've been following from, we don't take you for granted. Now, Friday, the 16th of this month, February, is Archbishop Janan Luwum's Day. This is a day that is set aside to commemorate him as a martyr, but also as a saint, as someone who was murdered because he stood for the truth. Now, the celebrations will be in Kitigum district, Muchini village. Just in case, I know not all of us can go to Kitigum, but at least you are sorted as long as you have your Church of Uganda Family TV. You can be following from the website, from YouTube, from all our social media platforms, but also on our mainstream. We shall bring you a live broadcast from Kitigum in the comfort of your living room or wherever you will be. You do not have to miss out as we hear testimonies about Janan Luwum. The Archbishop of the Church of Uganda will be the main celebrant, but the President of Uganda, His Excellency Yoweri Kaguta Museveni, is expected to be the chief guest. Now, we've come to the end of Family Hour. Tomorrow is a Thursday. We shall be talking about leadership and what are we think about in leadership. Sacrifice. Very, very important. Edrine Osteen Mukalazi is my name. Norman Conte. We have Raymond Tonena and very many other people. It's a good night. We meet again tomorrow.